Hello, my name is Samantha Musoke and I'm the INPAS Adoption and Engagement Director with the International Nonprofit Reporting Foundation. INPAS stands for the International Nonprofit Accounting Standard that was issued in October 2025. And in this video, I'd like to walk you through the INPAS Illustrative Financial Statements that are found as an annex to the INPAS implementation guidance. This can be downloaded for free from INPRF.org. I hope you'll find this helpful, whether you're an accountant or not, but I have assumed you're already familiar with reading financial statements. Now, before we dive in, let's take a quick step back and remind ourselves who financial statements are for and what information users are looking for, and how it's really fundamentally different from a for-profit paradigm. In that case, the main focus is on investment decisions and the key information is around return on capital and profitability. Now, from our research, we identified two primary stakeholder groups as users of NPO financial statements, and that's providers of finance, those that benefit from the services provided by the NPO, as well as those that represent those other groups. Now, given the stewardship role of trustees, we know that they also have keen eyes on the financial statements. The financial reports are important for accountability and also for decision making, and those decisions could range from providing or receiving funding, entering into a partnership, deciding tax status, etc. Now, also from our research, we found 4 areas of information that stakeholders are particularly interested in. And these are, is the NPO meeting its stated purpose? What impact is it making? Is the NPO managing its resources well and properly? Is it able to continue in operation? What's its financial health like? And is the NPO complying with all the relevant laws and requirements? So we can see that as we've developed INPAS, we've had these primary focus of the needs of users and the preparers in mind. So after we've had a look at the role of illustrative financial statements and what they can and can't do, we'll also take a look at the background to this sample organization, and we're only in this video going to focus on the 4 primary financial statements. We're not going to go into the notes. So one of the first questions people often ask me is, where can I find the illustrative financial statements? People tend to love them because they're really useful. They help us visualize the outcome of the INPAS requirements. They illustrate how the application of INPAS might be presented. They're really useful for both preparers and auditors and other users to familiarize the changes that INPAS will be bringing in. But they also come with some health warnings. Now, the text here is lifted directly from the document, and I just want to be clear to make sure that the intention is to illustrate what these financial statements might look like in a particular circumstance, but they're not intended to cover everything or all types of NPO. It's just one particular example. If your organization has much less complexity, then the financial statements will look more simple than these illustrative ones. So the complexity of the statements is driven by the complexity of the organization. One of the important requirements of INPAS is a narrative report to accompany the financials, but in this case, the narrative report is not provided. And in Practice Guide 1, there's a harmonized grant reporting format. This organization does produce grant reports. So what we see in the notes is the linkage to those grant reports, but the grant reports themselves are not produced. One really important thing is, do not think of these financial statements as a checklist or a template. INPAS is a principle-based standard and you need to apply it to your own situation. This really is just an example. Okay, with that said and done, here's some basic information about the organization, which is incredibly creatively named NPO A. So what it does research into respiratory diseases, and it supports individuals and families suffering from those diseases. It is based in country Z, but it has operations in X and Y countries. Its financial year is January to December, and its currency is CU, currency unit. Some basic background to help us understand the numbers. So the statement we're going to start with is the statement of changes in net assets. And if you're familiar with for-profit statements, you'll know that's usually called the statement of changes in equity, and it's been given this new name. Personally, I like to start with this statement. I think it is a very helpful place to give us context for the other primary financial statements. On the right here, you can see that there's some really helpful references to the sections, the relevant sections of INPAS. Obviously, that's not needed for actual financial statements. This is just to help you see where the different requirements come from. Now, on the left, we can see that the overall shape of this is it's an opening balance, the surplus or deficit for the year, unrealized gains and losses, any transfers between funds, and a closing balance. And then across the top, we can see we've got columns for restricted funds and unrestricted funds. And now in this instance, we've also, this organisation, NPO A, has opted, has chosen to revalue some of its assets at market value. And so it has a revaluation reserve. And then we've got a total net assets column. If you don't revalue assets, you wouldn't need those final two columns. What we can see here is sort of three numbers, if you like, that tell the big picture story. The organisation started with net assets of 1333. There was a downward movement, a reduction of net assets in the year of 59, and we closed with net assets of 1274. Now let's take a closer look at this surplus or deficit line. Now we can see overall we've got a deficit for the year of 67, and we need to be really careful to avoid jumping to the conclusion that this deficit necessarily means mismanagement of poor performance. It could just be to do with the timing of inflows and outflows. And what we can see here actually is that the overall small deficit is made up of a larger deficit on unrestricted funds and a surplus actually on restricted funds. Now, it'd be very helpful to have commentary in the narrative report to help us understand the meanings and the relevance of these numbers. Another important point here is transfers between funds. Crucially, it should always net to zero, and there are actually accounting implications as well, because you need to have some accounts within your chart of accounts to post these inter-fund transactions. They're neither income nor expenditure, and yet you want to be able to pull them out in the financial statements. And there's some important information on this final line as well, on the closing balance. Notice that both the unrestricted and the restricted funds have positive balances, 652 and 614, and we could calculate the percentage of funds that are subject to external restrictions if we wanted to. Now you note that nearly all the rows refer to note 4. This is the movement in funds note, and we are going to take a closer look at that because it's a really important new mandatory note within INPAS. Now just keep a mental note of these numbers 13367 and 1266 because they'll show up. So this is a look at movement in funds note. It's basically an expanded version of the statement of changes in net assets with the movement from opening funds to closing funds across the top and different funds listed down the side. And it's split between restricted funds and unrestricted funds. And at the bottom, you can see those numbers, the opening of 133 and the closing of 1266 that we saw on the statement of changes net assets. Now, within restricted funds, It's split between grants with delivery obligations and grants without delivery obligations. And we'll take a look at what that means shortly. In the unrestricted funds, note that it does include some funds that have been internally designated. Also note that transfers, the column for transfers nets to 0. And those of you with a keen eye might notice that the longitudinal study has a negative balance of 26. And any negative balance requires an explanation, and that's why that explanation is given below. Okay, next up, let's look at the income statement. Notice it's called the Statement of Income and Expenses, because expenses are actually the thing that links to the impact and the activities that we're doing. There's even an option within INPAS if you want to put expenses first and then show how you generated the income to finance those expenses. But NPO A hasn't done that. We've got columns for this year and last year. And again, they have opted not to do a columnar analysis for funds with and without restrictions. That's also an option. So you could, for the current year, and then you'd have to provide comparatives as well. You could do columns for unrestricted funds and restricted funds. So let's take a closer look at the income. We can see it's split into 3 types. There's grants, revenue from grants and donations, revenue from goods and services, and revenue from other income. And we can also see that the revenue from grants is split into 3 headings. So firstly, we have grants with delivery obligations. This means that the NPO has an enforceable obligation to deliver a specific and measurable output or activity. And there needs to be consequences for non-delivery. Income relating to delivery obligations is recognised as or when those obligations are satisfied. And you can see from the diagram that's the diamond. So delivery obligations are within restricted income, but not all restricted income has delivery obligations. The second row then is grants without delivery obligations, but which nonetheless do have restrictions. Number 2. Maybe the grant has an agreed goal or a target. Maybe it's even got some agreed activities or a budget, but failure to meet the goal, despite best efforts, doesn't have financial consequences. Unless, of course, there's misconduct, it's separate from that. Then the third row is grants or donations without delivery obligations and also without restrictions, i.e. unrestricted income. Now, you could use the information here to work out donor dependency. You could look at the percentage of income that's unrestricted, which is a useful indicator of financial health. And obviously, there's much more information in the notes there. Okay, let's move on to look now at expenses. So what we can see is that NPO A has decided to group its expenses as operating expenses, grants and donations, and other. This is not a requirement. Expenses can be presented by nature or by function or a mixture, but there is a rebuttable presumption that expenses are presented by nature. So if you want to do something different, you can, but you just need to explain why that is more useful for users of your financial statements. And then you can see there are various notes providing more information, including a note about fundraising costs, that's mandatory, and there's also a note about support costs or indirect costs. And this is necessary for NPO A because it has also produced a supplementary statement in accordance with INPAS Practice Guide 1 on harmonised grant reporting, and one or more of those grant reports includes the support costs attributed to that grant or project. Because of that, it's also required to give a note about support costs for the organisation as a whole. So that's bit about expenses. Underneath that, we come to the operating surplus or deficit, as it is in this case, we can see it's 68, followed by gains and losses, which are usually the realized gains and losses. There are some quite specific rules about which gains and losses come into the income statement of income and expenses and which have to be into the statement of changes in net assets. And then finally, we get to the total deficit of 67, which of course agrees to the figure we saw on the statement of changes in net assets. And of course, remember, we know from that other statement that this total deficit of 67 is actually made up of a larger deficit on unrestricted funds and a surplus on restricted funds. And we also know that at the end of the year, the fund balances are all positive. So a note of caution, it really can be dangerous to look at the total financial result for the year, deficit of 67, and draw very meaningful conclusions. It's not like a profit figure. So just take that note of warning. Okay, the next statement we're going to look at is the statement of financial position, which is the same name as usual, also colloquially called the balance sheet. In this example, it's presented in what we call a kind of vertical presentation with assets minus liabilities on the top equal to funds on the bottom. Like IFRS for SMEs, INPAS also allows alternative presentations, such as putting assets on one side equal to liabilities plus funds on the other side, or assets on the top equal to liabilities plus funds on the bottom. As long as those three key elements of assets, liabilities, and funds are present, there's flexibility about how that is presented. Okay, let's take a look at some of the things on this balance sheet, starting with property, plant, and equipment or fixed assets. Now note, these should appear on the balance sheet if they meet the definition in section E2. That is largely unchanged from IFRS for SMEs. Now, I know it's common in some cases for NPOs to expense grant-funded assets, but in INPAS, the source of funding for an asset is not relevant to whether it should be capitalized or not. Also, as a requirement of section B8 on fund accounting, if a fixed asset has use restrictions, then it appears within restricted funds. And the implementation guidance has some examples on how to do the accounting for grant-funded assets and assets with use restrictions. Now, importantly, the fixed asset note also has to disclose the net book value of any assets with externally or grantor imposed use restrictions. Now, this is particularly important because it enables the NPO and the readers of the financial statements to do a calculation for general reserves. Now, this term general reserves is not defined in INPAS or used in INPAS particularly, but it is commonly taken as your unrestricted funds minus any fixed assets or non-current assets that are included within that figure, so that you can get a useful figure of the amount of reserves available if you are experiencing a shock. Now, NPOs can calculate and comment on that figure in their narrative report, and indeed are encouraged to do so. Okay, now there are some interesting things to notice in current assets. Now, if you look at note 13 on inventory, you'll discover there that the inventory talked about is medical supplies and consumables that are used in delivering their services of supporting patients suffering from these respiratory diseases. Now, these inventories won't be sold, but it still has a value and it appears on the balance sheet because of its service potential. It's useful in delivering the mission of the organisation. Some of the inventory was received as a donation, but it's close to its expiry, so it's not recognised. And all of that is explained in the notes together with the sections in INPAS that allow those aspects. Another interesting line here is work in progress, grants with delivery obligations. Now, if you remember, this relates to a grant where the NPO has an enforceable obligation to deliver something measurable. In this case, it's a research report. And in note 5, we can see that the NPO has incurred some expenses on this pollution impact research, but they won't get recognized as expenditure until the delivery obligation is fulfilled and the report is accepted by government. So while the delivery obligation is in progress of being delivered, the income isn't recognized and the expenditure isn't recognized. They end up on the balance sheet. The next thing we can see here is a prepayment for a grant fulfillment asset. Now, this means that NPO has made a grant to another organization, and that includes a delivery obligation on NPO B, the grantee. NPO has paid the money, NPO A has paid over the money, but NPO B has not yet fulfilled its obligation. This prepayment asset will only get recognized as a grant expense when NPO B has fulfilled its obligation. Okay, the other thing we can see here is note the cash balance moving down from, my head might be hiding the numbers, but the cash balance is moving down from 729 down to 337 in the current year, and that will be explained in the cash flow statement. Okay, let's come to look at current liabilities. We can see here there's a line for grants with delivery obligations. So again, NPO A has received a grant. It's accepted an obligation to deliver something measurable. In this case, it's paying staff for a longitudinal study. NPO has received funds to cover 12 months of salaries in April. It's incurred 9 months of expenditure. So this liability relates to the enforceable obligation to pay 3 months' worth in the following year. Now, it's worth noting that NPO A has also received and made grants and donations that do have restrictions but don't have delivery obligations. Now, these get recognized as income or expenses as they occur, rather than as work done or obligations are fulfilled. They don't appear on the balance sheet. So these things that we've seen on the balance sheet really relate only to grants made or given that have delivery obligations. That's really important. So finally, the last section, we've got the funds section of the balance sheet. You may remember these numbers correspond to the statement of changes in net assets, and there's a lot of further detail in note 4, the movement of funds note that we looked at. And you'll remember that the unrestricted funds included some designated funds that had internal ring fencing for their use. So there's quite a lot of interesting things on the balance sheet. Very briefly, we're going to have a look at the final primary statement, the cash flow statement. And this, it helps us understand that movement from the opening cash of 729 down to the closing cash of 337. And we can see here it's due to operating activities, investing activities, and financing activities. Now, INPAS has a choice of using the indirect method or the direct method, and in fact, both are shown in the illustrative financial statements just to help help preparers and auditors to know how to do that. Now, one particular noteworthy point of interest is this section called investing activities, which includes payments for property, plant, and equipment. Now, the term investing sort of implies the intention of a financial return, because that's the way we've come used to using it when we look at financial statements. But let's think about a grant-funded asset, such as, I don't know, medical equipment, that will have a social return rather than a financial return for this NPO. Does it make sense for it to be under this heading, investing activities? Well, the term investing could mean a number of things. It could just be investing in the future, investing in the NPO's ability to deliver its mission in future years. So you can put it here under the heading Investing Activities. But there is also an option to include cash flows associated with assets under Operating Activities heading, if that's a better fit. So we've finished the 4 primary financial statements. Let's come back to look at the main information needs of users of NPO financial statements. And hopefully this overview has given us a sense of how a user of NPO A's financial reports could measure and assess its performance and its position in a way that's appropriate and meaningful. We can see how the meeting of purposes can be shown in the narrative report. Management of resources can be found in the movement of funds and the fund balances. We can look at support costs and fundraising costs, and various expenditure disclosures can help assess whether the organisation has used its resources well. The capacity to continue, or its financial health, lots of different ways we could look at that, but some important ones could be, for example, the percentage of unrestricted income, donor dependence, percentage unrestricted funds, days worth of reserves, and any liabilities due to delivery obligations, and obviously things to do with liquidity and asset base and things like that. And then compliance, again, some aspects of that would come from the narrative report, but we can also look at delivery obligations being met and the recognition of income and expenses associated with that, which is an implication that delivery obligations must have been met. And we can also look at the giving and the use of restricted funds, and by seeing that we can be confident that funds have been used in accordance with the restrictions that they came with. So I hope that's been useful. Please do download the full financial statements and take a look at all the notes as well, which provide more information. So and give us some feedback. I hope this has been helpful, and we look forward to staying in touch.